My friends, listen to me. If you are sitting there right now, looking at your retirement accounts, or maybe you're already retired and trying to make every single dollar stretch, I know exactly what is going through your mind. You are looking at the price of groceries, you are looking at the cost of your medications, and you are feeling a fear that is freezing you right in your tracks. It is the fear of running out of money before you run out of time. And because of that fear, you might find yourself looking for quick fixes. You are sitting on your tablet, you are scrolling through your phone, and up pops this cute little app with a picture of a bear on it. It is called Dave. And the headline looks beautiful. It says, get up to $500 instantly. No interest, no credit check, no hidden fees. And you ask yourself, is this the answer to my prayers? Is this the safe little bridge to get me from my Social Security check this week to my small pension next week? I need you to stand up straight, take a deep breath, and look at this with clear eyes, because what you don't know will hurt you. Today, we are going down into the truth of the Dave app, the good, the bad, and the downright dangerous for someone in your stage of life. Let's start with what they want you to hear. The pros. On paper, it sounds like a sweet deal. If you are in a tight spot, Dave offers what they call an extra cash advance of up to $500. They do not run your credit report. They don't care if your credit score is a perfect 800 or if it has taken a few hits over the years. For a lot of people who have been shut out by traditional banks, that feels like a warm hug. And they tell you there is no interest. Compared to those nasty, predatory payday loan storefronts that charge 400% interest and trap people in a cycle of poverty, Dave looks like a saint. Plus, if you open a checking account with them, they offer a decent interest rate on your savings and let you get your direct deposit up to 2 days early. If you are waiting on a government check, getting it 48 hours faster sounds like a luxury. But I want you to hear me, and I want you to hear me clear. Nothing in this world is truly free. Nothing. Let's look at the cons, because this is where the picture starts to change. To even use Dave, you have to pay a monthly subscription fee. Now, it might only be $1 to $5 a month. You might think, Susie, it's just a few dollars. What is the big deal? The big deal is the percentage of what you are actually getting. If you only qualify to borrow $25 or $50 and you are paying $5 a month for the privilege, that is a massive percentage of your money gone before you even start. And then comes the speed trap. If you need that advance money immediately because the electric bill is due today, they charge you an express fee to get it onto an external debit card. That fee is a percentage of what you borrow. Suddenly, your interest-free advance isn't so free anymore. But here is the real danger for a retiree, and this is what keeps me up at night for you. How does Dave get paid back? The minute you sign up and take that advance, you give them permission to link directly to your primary bank account. And on your next deposit date, the exact day your Social Security or your pension hits your account, Dave automatically reaches in and takes their money back. Think about the psychology of that. If you are already living on a fixed income and you are short $500 this month, what happens next month when Dave automatically takes $500 out of your check the second it lands? You are now $500 short for the next month. You have just created a financial quicksand. You are borrowing from next month to pay for this month, and you will find yourself trapped in a loop of digital borrowing that you cannot escape. And what happens if your check is a day late, or the timing doesn't match? If Dave tries to pull that money out and your bank account is empty, you can trigger massive overdraft fees from your own traditional bank. One user recently reported that Dave withdrew money when they didn't have it, plunging them into a deep financial hole. You cannot afford that when you are retired. You do not have the time or the extra income to recover from stupid mistakes. Furthermore, Dave determines how much you can borrow based on your steady deposit history. If your retirement income is sporadic, or if you don't have at least $1,000 in regular monthly deposits hitting that specific linked account, you might not even qualify for the $500. You might get approved for $25. Is it worth risking your banking privacy and security for $25? Absolutely not. So, what is the actionable takeaway here? What is the law of financial survival for you today? The Dave app is not an investment strategy. It is not a financial planning tool. It is a digital band-aid for an emergency. If you are in an absolute emergency situation and you use it once and you pay it back immediately and you never touch it again, fine. It is better than a payday lender. But if you are thinking about using this app as a regular way to manage your retirement budget, I am telling you right now, do not do it. If you are consistently short of money every month, the solution is not to borrow your way out. You cannot borrow your way out of debt. You have to look at the hard truth of your spending. You need to look at your fixed costs. Can you downsize your living situation? Can you call your utility companies and get on a fixed senior balance plan? Can you look into local pharmaceutical assistance programs to lower the cost of your pills? Your goal in retirement is to protect your security. Your security comes from having clean, unencumbered ownership of your income. When your Social Security check hits your account, every single penny of that check needs to belong to you, not to an app, not to a digital bear, and not to a fintech company. Be strong. Be smart. Protect your peace of mind, because at this stage of your life, your financial peace of mind is worth more than any quick $500 could ever buy.